This is Asia Times News Video.
This is David Goldman, Asia Times business editor, speaking to you from New York City the afternoon of March 24th. Well, it was a bad day for U.S. stocks, even though it was a good day for bonds. So the trade-off between stocks and bonds wasn't depressing the market. Something else is at work. In my view, what's at work is feeding expectations about economic growth. We've had one disappointing economic number after another, and a particularly interesting one is the fall in durable goods orders during the month of February, reported this morning, as well as a fall in capital goods orders. Now, this is interesting for two reasons. As you see in the chart, durable goods orders have failed to get back to their previous peak, and on a 12-month rolling basis, they're down about 10% from where they were in 2018. Hardly a sign of expected recovery. And that's doubly interesting because manufacturers report supply constraints as their single biggest problem. Supply chains just aren't functioning. Now, you'd think they would buy capital equipment to correct that problem, but in fact, manufacturers are having trouble making money. And we explained this on March 22nd, looking at data that show that the input prices to manufacturers have jumped at the fastest rate since the 1970s, but their output prices, finished goods prices, haven't kept up with the input costs. So the more you produce, the less money you make. That's why manufacturers are constrained. That's what we call stagflation. The stag part of the stagflation occurs when you get inflation on the input side, but you can't pass the prices on to the finished goods buyer because the finished goods buyer balks at paying higher prices. Why is that the case? Well, Americans are not going out on the spending spree that the Biden and the previous Trump stimulus envisioned. They're squirreling a lot of their money away. In January, Americans saved 21% of their personal income. The long-term average is about 7%. That's because people can see through this stimulus charade. They know that it's a one-shot thing, that the likelihood is going to be inflationary consequences. So they're saving against a rainy day. So consumption isn't growing the way it's supposed to. We saw a big drop in at least one important measure of retail sales between February and March. We're seeing production and orders disappoint. So if the economy is not going to grow the way the stimulus envisions it to grow, profits won't grow, margins will be compressed, and the stock market won't do nearly as well as modern monetary theory seems to envision. So be afraid, be very afraid. This is David Goldman speaking to you from New York.